In the stock market world, there's different types of stocks out there. Some are big companies, some are small companies, some are technology or high growth companies, some are less growth, but maybe they pay you some income or dividend. There's different types of companies out there. But when it comes to analyzing companies, decide what to invest in or trade in, there's really two big schools of thought, and that is fundamentals, or fundamental investing, and technical analysis. So it's good to have a good understanding what's the difference between the two and where do you apply them in which situation. So if we think about fundamentals, that's where you're really looking at less frequent trading, and you're more looking at business fundamentals, right? You're looking at the company itself, the markets they're in, what competitive advantages they may have versus their competitors, what are they good at? A lot of times with fundamentals, you're going to look at ratios. If you've heard things like the price to earnings or PE ratio, or price to book, value investors look at that, price to book value, or PEG ratio, or dividend payout ratio, all these different ratios that are out there. That's fundamental analysis, really looking at ratios of business performance, basically. And so it's fundamental analysis. Think about it, it's all about evaluating the business. And this is typically used by, let's say, longer-term traders or longer-term investors, where they're trying to look at a business and see how they might do over a longer period of time. And maybe they might be a less frequent in and out of a stock. Typically, not exclusively, but typically. If we look at technical analysis, we're looking at organizations, we're looking at stocks, but we're really looking at, from more of a supply and demand standpoint, as far as what's happening with prices. Are prices going up and down, and what's impacting that? What's the market sentiment around that? What's driving this moves in the price? And we're looking at things like trends. Is there a certain trend? Is the price stock trending up, or is it trending down? That's where we use a lot of things like charts and all that, because we're trying to visually represent some of these things so we can see when should we buy, but also a very important technical analysis, when should we sell? So that in and out, that enter and exit strategy is very, very important for traders in order to make a profit. And so it's all about recognizing indicators and patterns. Think of indicators as like the tools. If this happens, then most likely this price is going to go, let's say, up, for example. So because I see this indicator, I'm going to invest here. Price goes up, I'm going to sell up here because my indicator might tell me to sell too. And then I make the profit between the two. Or I'm looking at a certain chart patterns, and I see, like when we're looking at like candlesticks and things, I see certain things happening. I know I'm going to take action, either buy or sell action, or maybe I won't do anything based on this technical analysis. And that's, as far as looking at indicators and things along those nature. So if we look at an example how two people might look at this differently, one who's a very fundamental person, you can combine the two, but let's say someone who's very focused on fundamentals and somebody's focused on technical trading. Let's look at one stock as far as how somebody might approach it or talk about that stock. So let's say we have two investors, and the one stock we're going to talk about, let's say example Tesla, right? Electronic vehicles. So a person in fundamental investing would say why they might want to invest in it. They'd say Tesla is the dominant market leader in the super growing area for the future, which is EV or electric vehicles. Even though their stock price is relatively high to their price earnings ratio, I think the future looks very bright, and I want to buy now before the price goes up even further. A technical person, both also interested in buying the stock, might say Tesla's price just went above its 50-day moving average. Plus, Tesla is still near the channel bottom, so trends look good, and I'm going to buy. So if you kind of break that down a little bit, you can see some of the words popping out. Let's look at this here, where the fundamental person is looking at growth, super growing area. They're going to use a ratio, more feelings, like I think the future looks bright. Where a technical person's not about feelings, they're about technical, they're about math and charts and market sentiment, those things. So the price is above its 50-day moving average, the average prices over the last 50 days. We're going to learn all about moving averages, don't worry yet. And it's near the channel bottom, so it's near a bottom price, so they think the trend looks good, that it's going to rebound and go back up. So they're talking not about the business at all, they're talking about it as an individual stock opportunity to invest in and get in, and then maybe later get out when they change their mind. So a question might be, can you combine the two? Usually people who are fundamentals, they stay that way. Some people who are really technical stay that way. You can combine the two. I actually do combine the two too at times. And one way I would do that, or people do, is they might use fundamentals to narrow their choices of stocks. They might use some of these things as a screener, like a stock screener, to narrow down their choices. Or they narrow their universe down by, I'm looking at growth stocks, or I'm looking at stocks in the electric vehicle sector only, because I believe in that sector, that's more of a feeling or a belief. I believe in the sector of electric vehicles. And then they'll use technical type information to determine if now is the optimum time to buy or maybe when to sell. So it's really a matter of a style and strategy too, and also what type of investor or trader you want to be. For example, a day trader would never really consider fundamentals. They're trying to get in and out of stocks in the same day. So they're not looking at long-term prospects. They're looking at short-term price movements to make a profit on. So the good news is with stocks, you can make money and be successful, whether it's with fundamentals or technical type of trading. Either way can be successful and might be more about your type of style and all that. And you can combine the two as well. Both have been proven to be very, very successful.